I looked through the company website, and they were young enough that they had every single employee's picture on the website. So I was scrolling through there, and I was like, okay, I would be like the oldest person at this company by 10 years, probably. I think the average age was seriously probably like 22 years old. And I was just like,
Yeah.
this is insane. I'm like, I'm way too old. And Tom's like, no, we would love to have you on board. So he brought me on, took a chance on me. And I just loved it. I was with Carta for almost 5 years, and just it put me in the center of the startup ecosystem just in general.
You're listening to the Venture Best Spotlight, a podcast by Venture Best, the venture capital and emerging companies practice group here at Michael Best and Friedrich. On this show, you'll hear from some of our amazing founder clients and network of venture capital managers. These individuals are inspiring instrumental changes to the way the venture economy produces, invests, does business, and defines what it means to be a startup.
Well, thanks so much, Jeff, for taking time out of your very busy schedule and being part of the Venture Best podcast here. So, yeah, great to see you. And yeah, I wish I almost always wear a hat. So if I had known you were going to wear the cool hat, I would have worn one too. Well, one of the things I wanted to ask you about, and this may sound like puffery, but it's totally the truth. You are one of the most gracious. Like I always tell people, if there's one person in Utah to know, you want to know Jeff. And when people are trying to, whether it's an investment banker or new venture capitalist. And so I'm just curious, how did you build your skill or muscle, or what is it about you that you're just such a good community builder and connector? Because honestly, you're the best I've ever seen. You're so good.
Man, you're way too kind. I think it's been somewhat natural. I've always loved connecting people. So I got thrown in the first startup that I actually joined.
Yeah.
I started out, they didn't know where to put me. They just brought me over. One of the guys, I was at this investment company, and one of the partners went over and he brought me with him. So I'm employee number 15 at this little startup. We just raised some capital from like Insight Partners, so some good VCs. And they're like, well, just jump on the phone and see if you can get people to buy what we're selling. Right? And so I was like, well, so my first inclination was, well, who do I know that could really benefit from this? And I was like, how can I connect people? And it's always been that do I know somebody that can help somebody else type of a mentality? And yeah, that's kind of, I ended up creating a partnership program for that company that was just kind of fortuitous. And it ended up being the biggest source of revenue for the company.
That's awesome.
It was through a partnership channel that they weren't even looking to pursue. So it was kind of cool. And I think it just kind of came natural of them letting me do what I kind of naturally wanted to do.
Yeah. Well, you have such an amazing low ego, high grace persona about you. I don't know where that, how that all got built, but whatever magic chemistry came together, it's very appreciated whenever, and everyone I've ever connected with you, they're always like, man, he's the best. He's the nicest. So
you're so kind. Thank you, Shawn.
No,
I really appreciate
of course.
that.
No, of course. It's the truth. So this first startup, was that in Utah?
It was. Yeah, a little company called Icono Communications.
Okay.
We raised a few rounds of capital. It was during the internet .com boom and then bust. So
I'm familiar.
A little bit reminiscent of the AI community right now. So kind of interesting.
Yeah. We'll definitely get to Utah because I think again it's just become a tremendous entrepreneur venture market. It's so cool to see, and it's people like you. We had Brad Feld who just released a new book here, talks about building startup communities and and all that. And sometimes you can get a little lazy, honestly, which I think Colorado got a little complacent some of the last couple of years, and now I feel like we're foot on the gas again, reinvesting and supporting, and Techstars is back, and all these good things are happening again. But you can't take it for granted. It takes a lot of work to build these communities and have enough of an ecosystem to support the companies we all work with, for sure.
Sure. Yeah, and I think not just build it, but to maintain it. And that's something in Utah as well. It's groups will emerge, and then it's hard to maintain it sometimes.
Yeah.
And I think we've seen some of that in our ecosystem here.
Interesting. Well, you worked for one of the most famous companies in startup world in Carta, which, is almost ubiquitous with venture capital and startups and cap tables. So, and honestly, I don't know the story. I knew some of your other startup things you had done in the past, but if you don't mind sharing, yeah, how did you find your way to Carta? Or tell us about
Okay.
that.
So crazy pathway to Carta
Okay.
because I had so after the startup venture that I went
Yeah.
with at Econo, I went off and tried to start my own company with some friends.
Okay.
And I mean, it did pretty well, but
Yeah.
my wife started a company and it did way better than anything
Ah.
I did. And so I ended up helping her raise some capital. We found a strategic partner that built out all the technology infrastructure and everything, and um, grew that company extremely quickly. So it went to 40 million in annual sales, and
Wow.
um, it's consumer product space,
Cool.
definitely different than the tech space I was in.
Yeah. And
And
what time period was this? Just curious.
this was 2000, what was it? 2003 or 4 to
Okay.
2000. Yeah.
That was a hot time in consumer products too.
Yeah.
Yeah.
Yeah, it was. I
Yeah.
mean, we hit it really, really favorably. But what was interesting is that I ended up spending 10 years helping run that company. We
Huh.
sold the company to a private equity group, and
Okay.
they made me stay on for 3 years as the
Uh,
CEO. And it was 2 years too long. So I was ready for a break after that. I took a break
yeah.
and I was looking at different companies. I wanted to get back in the tech startup ecosystem. And I came across this little company called eShares. And I was like, this is the coolest
Right.
company, trying to make
That's
the
right.
private markets more like the public markets, and
Yeah.
saw the vision. And I met this guy on LinkedIn named Tom Matta.
Yeah.
And Tom was looking at maybe opening up an office in Utah for Carta.
Okay.
And the eShares later
E-shares.
rebranded to Carta.
Yeah.
So, but what was kind of fascinating is that I looked through the company website, and they were young enough that they had every single employee's picture on the website. And so I was scrolling through there, and I was like, okay, I would be like the oldest person at this company by 10 years, probably. I think the average age was seriously probably like 22 years old. And I was just like,
Uh-huh. Yeah.
this is insane. I'm like, I'm way too old. And Tom's like, no, we would love to have you on board. So he brought me on, took a chance on me. And I just loved it. I was with Carta for almost 5 years, and
Yeah.
just it put me in the center of the ecosystem, of the startup ecosystem, just in
Yeah.
general. Met tons of founders. I was at a point where I could start angel investing. And so it was kind of fun to,
Uh-huh.
you know, get to
Yeah.
know a lot of
Great deal flow.
VCs and great
Yeah.
deal flow, seen a
Yeah.
lot of stuff happening.
Yeah.
It was really cool. It was a cool time, and absolutely loved my time.
That's awesome. What was, and forgive me again, because I should know this, but what was your actual role there? Did it kind of change through time or?
It did a little bit, but again, it kind of morphed into partnerships. So
Yeah. Which makes sense with you. Yeah.
I
For sure.
started connecting folks. I mean, it was an obvious fit. It's like, hey, instead of like going head to head with the attorneys, for example, it was kind of
Uh-huh.
early on. It was like, it was kind of like, well, man, are we going to be taking billable hours away from attorneys? Are they going to hate
Yeah.
us and all this? I'm
Yeah.
like, they can be our best friends. And so
Uh-huh.
I started getting folks like you that would,
Yeah.
go, hey, this could actually be really helpful for our clients,
Yeah.
and let's try it out. And
Yeah.
so that was just kind of natural. And then, it kind of led to other types of partnerships. It's like, who else is kind of going for the same
Uh-huh.
types of customers that we could kind of go out and be friendly with? And Carta was a perfect position because I mean, we
Yeah.
could play friendly with everyone pretty
Totally.
much. Like,
Yeah.
so it was really a cool place to be.
Yeah. Well, and I mean, I think almost any lawyer you talk to that knows about this industry, like the analogy I always give is we want Hyundais to have airbags. Like you want the most people to have the best outcome. And Carta was that, like having lawyers build cap tables and do all of the stuff that Carta eventually did is just not efficient. And honestly, for us, it's a lot of risk and a little reward. And so, it was such a beautiful idea, yeah, to put that all together.
Yeah. The crazy
Yeah.
thing is it didn't start out that way. It started out pretty contentious, right?
Uh-huh. I
And so
remember.
building those bridges, and it was a really interesting dynamic because the attorneys that we were partnering with, they're not the end. Well, they were kind of our power users, right?
Uh-huh.
But they're not paying for the product. So it was really an interesting dynamic. But if you can get your attorney to say, hey, you should use this solution or that solution, it's like just
Totally. And Nathan mentioned it earlier before we started, but and then you're involved with Startup Stack as
yeah.
well. Yeah. How
Yeah.
did that come about?
I actually started the Startup Stack probably when I was at Carta, and we were trying to get the word out on Carta offers a discount.
Yeah.
And so I was like, we've got to get the word out that this is a killer deal. And this helps founders, right?
For sure.
And so I knew there were other partnership leaders out there that had the same thing. And so I got with a group of them and we were like, hey, let's just start sharing deal flow, right? It's like, you guys have a great offering. You've got a discount. Let's put them all together and let's help benefit the startups that don't know that they can get these discounts.
Yeah.
And that was the beginning of the Startup Stack.
That's awesome. It still frustrates me because starting a business, as you know, is so hard just to execute on the product or the service or the, whatever. But then you add in payroll and compliance and taxes, and it's just, there's so many headwinds. And I think we make entrepreneurship this cool thing, something to aspire to. And it is great. I'm obviously so bullish on it, but the more of those headwinds we could get rid of, the better. And, everything you do seems to be involved with getting rid of headwinds for founders. So.
Yes. Yeah. And I think that's the key is right now it should be the easiest time ever to start a business. Right. I mean, it used to be that you had to get an attorney to draft up your
basic stuff.
Very basic stuff that now you can probably get a lot of it done and then take it to somebody like you that knows what they're doing and just go, hey, Shawn, can you check this and make sure I'm like not signing stuff that I shouldn't?
Exactly.
And so there's a lot of things that you can kind of streamline, but then there's, like you mentioned, payroll. I mean, if you can you can outsource all this stuff now. You don't have to hire somebody to run payroll, hire somebody to do your, sales tax.
Such a nightmare.
Accounting, bookkeeping, financial modeling, cap tables, all that stuff. You can outsource all this stuff.
Yep.
And it will be done better than you would do it if you were doing it yourself, or if you probably hired an internal person.
Oh yeah, 100%. Well, you brought it up, so I have to ask. And so then Forecastr is where you're running things now, or one of the leaders of, which I think is awesome, by the way. I think having a tax finance background, this is such a blind spot for so many founders, and it's something that's not easily solvable. Frankly, there are some legal solutions. You can hire Gusto or someone like that to do payroll. Financial modeling is so important. And so, one of the stories or adages I often talk about is the Costco moment where a company will find, and maybe you went through this with your wife and your company, but you grind, and then all of a sudden you get your Costco moment where Costco agrees to put you in all their stores. And that's actually what kills you because you haven't built, the infrastructure to support that and sustain that. And you have cash flow hits because you got to buy the inventory first or whatever. So I think financial modeling is so important and so overlooked. So yeah, I'd love to hear more about that journey. And honestly, I'd love to hear more about Forecastr in general. Yeah.
Yeah. So I'll tell you what attracted me to Forecastr. First of all, when I was at Carta, we grew to a point where we were about 2,000 employees by the time I left. And so, I mean, it was a big company. It wasn't a startup anymore, right? They kept a great startup culture. And, at times it felt like a startup within a startup. But I mean, 2,000 employees, you have to start acting like a big company. That probably wasn't my jam. And so I was looking for a smaller company. I had met Stephen and Logan, the founders of Forecastr, when they were going through Techstars. And of all places, I actually met them in Boulder.
Oh, that's so funny.
So I happened to be there. And I had a friend that was going through the Techstars Anywhere program, happened to be in Boulder. We met up. He's like, Jeff, you have to meet these guys. These guys are so awesome. They've got this cool company. And so I briefly met Stephen and Logan there. We got in touch afterwards, got them set up on Carta actually. And we started, we just started kind of trading because what they were trying to do was what Carta was doing for the cap table, taking the cap table out of spreadsheets into a software platform, making it easier to manage and everything, hook into the systems. So Stephen and Logan were trying to do the same thing with the financial model. So they're saying, 99% of financial models are done in, Excel or
for sure.
and it's got 40
Where you're just
tabs on it.
hoping that that formula is still right, or you didn't screw
Yes.
something up, or
Yeah, easy to break. I mean, you can break
uh-huh,
it. And the challenge with spreadsheets, with financial models, or even cap
yeah,
tables to some extent, is that the person that builds it, they might have the best financial model in the world. And
yep,
they're like, this thing, I mean, it's got 40 tabs and it's got, it does all this regression analysis, it does all this
uh-huh,
stuff. And then they hand it off to the client and they're like, what in the world do I do with this thing? It's like,
yeah,
I have to have like a PhD in Excel to run
uh,
this. And yeah, and so, is it really that beneficial for anyone other than if it's a fractional CFO that build it for you, you have to keep going back to the fractional CFO,
sure,
paying
totally,
them every time you make a change, every time you break a
yep,
cell or a formula breaks, or
yep,
worst case, if you break a formula somewhere in that
yep,
spreadsheet and then you're relying on the data that's kicking out
uh-huh,
and it's wrong and you start making decisions on that, I mean,
yep,
that can be catastrophic, right?
absolutely,
So having a software with those built-in protections makes so much more sense. So you've got
uh-huh,
it into a software platform. It ties into your accounting. It can bring up red flags, can integrate all of the information in your accounting system, pull that in. So now you can start to automate reporting. You can start to
mm,
automate, all of this functionality that you'd have to do manually other ways.
yeah. Which founders are all really good at that too.
Yeah, right. Oh, and they love it. They love, anything they have to be in a spreadsheet and manually updating. So that's their favorite thing to do, right?
Great use of time. Yeah, yeah,
Yes. Yeah.
exactly. And
So
you just did a real big upgrade,
we
what,
did.
a month ago or 3 weeks ago, maybe? Yeah.
Yeah, probably a month and a half ago, we released
Okay.
Forecastr 2.0.
Time
And
flies.
the coolest thing from my perspective, I know there's a ton of stuff on the back end that makes it so much, faster and more
Yeah.
flexible and everything. But the coolest thing was when they showed me the dashboard. You can create these custom dashboards. So as a
Okay.
founder, you can say, okay, what metrics matter to my company? I need to see my CAC on a daily basis. I want to see where my
Uh-huh.
LTV is. I want to see, inventory turns, whatever those metrics are that matter to your company. You just
Yep.
put them in a dashboard. You can
Yeah, that's
actually
cool.
move the different tiles to different places, and so you can create your custom dashboard so that
That's
you go
awesome.
in and you can see what your cash burn is up to date, what your
Uh-huh.
runway is, and it updates for you. And so as a founder, you don't have to go in and manually update everything.
Yeah,
You've
it's
got this
just there.
dashboard that helps you make decisions as a more of a CEO than just a founder.
Yeah. No, that's awesome. I feel like we're in this. I mean, you've been through a few cycles, as have I. Kind of coming out of COVID, anyone with a pulse was, and especially if you had AI in your name, you were getting a check written to you, and that
Yeah.
era is over. And I think I just saw Peter Walker from PitchBook had a chart about how how many fewer companies are raising, Series B, Series C. Like people are just running out of money. And I think part of that is investors want to see a path to profitability.
Yes.
They want to see these customer acquisition costs going down over time, things like that. And so financial modeling, and I think the other thing I think I've seen before in Forecastr is you can kind of debate like adding another SKU or adding
Oh,
another
totally.
thing
The
like that. And I
revenue
think that's
channel,
so important.
right?
Yeah, the revenue. Yeah,
Yeah.
it's
So, I mean,
really
if you've got an
cool.
additional channel, you can start to project that out and say, okay, what would happen if we added this new channel? How long would it take us to build it out? And what would we
Yeah,
expect? Let's run some scenarios, see what it would take and whether it makes sense. But even more importantly, if you've got multiple channels of customer acquisition or revenue, you can start to see which ones make more sense. It's like,
gotcha.
where should we focus our time? I mean, we've got a limited amount of time and resources. Like this channel, if we just put more into this channel,
Uh-huh.
it'd do way better than if we like spend all of our time and money doing this. Um,
Yeah,
so there's a
that's
lot
so
of great
cool.
insights that you get as a founder. Like I said, it makes you a real CEO where you're making
Uh-huh.
data-driven decisions, operating the company rather than just kind of guessing.
Yeah. Well, and no offense to Carta, and I'm a former tax accountant, which is really like
Mhm.
a reporting function, but cap tables are really a reporting function
Mhm.
versus Forecaster is so predictive, right? And we know whether you call it the Pareto principle or whatever, like 80% of your returns usually come from 10 or 20% of your effort. And so being able to have those insights and make make decisions based on real data. So
Totally.
cool. Yeah.
Yeah. And obviously you have to have good, historical data
Uh-huh.
that you're basing some of it, and it's going to be guesswork, especially early on.
Yeah.
What a lot of founders don't realize is that their projections should get better and better and better and better over time, because your data now if you're tracking it, you're going to
Yeah.
see what's happening in a real-time basis. So
Yeah.
it's something that most founders really neglect, is
Uh-huh.
setting a goal for the month and saying, here's our projection, and then
Yeah.
actually forcing themselves to say, okay, at the end of the month, how did we do? It's like, it's
Uh-huh.
really simple. And so that's what
Yeah.
one thing Forecastr does. We kind of force that behavior. Monthly, they'll meet with like their financial analyst at Forecastr, and
Yeah.
they'll run through a variance analysis. Like, here's what we said we were going to do. Here's what we actually did. It's like, why is your revenue half of what you projected, right? It's like,
Uh-huh.
okay, what happened? Or why did we exceed it? And is this a trend, or is that a one-time anomaly? You can
Yeah.
start to really dig into understanding your business, but you have to be disciplined in terms of
Yeah.
measuring and adjusting things going forward.
Yeah. You make what you measure. Yeah. So, and we can cut this out if you want, but just curious, you're going to have this great data set. Eventually, will you start to do like themes or averages or like report on, hey, companies?
Benchmarking, yeah,
Yeah.
for sure. Yeah, we've already
Yeah.
been doing that. I mean, obviously, it has to be anonymized. We're
Totally.
not going to share confidential information, but collectively, it's very similar to Carta.
Because
Carta
it's a
has,
great tool.
oh, it's amazing.
Yeah.
The stuff that Peter Walker puts out, and the data
Uh-huh.
insights and all of that you can gather is
Yep.
extremely valuable. And so
Yeah.
we're pulling in real time, real financial data, and then
Yep.
we're putting the projections together. But you're starting to see patterns, whether it's
Yeah.
industry related, whether it's, size of company, there's all these things that you can start to say, hey, with a company in your space at this time, this is what we're
Yep.
typically seeing. Here's some
Uh-huh.
benchmarks to
Right.
measure against. It's like you're way off, or you're spot on. You're in the
Yeah.
median. So we're already doing that data warehousing and starting that process.
Yeah. Because I think that's really valuable too for a founder.
For sure.
Hey, is my customer acquisition costs 3x what
Yeah.
my peers are in this industry? Well, what am I doing wrong then? How do I tighten this up? Or is it way too low and maybe I could dump some more gas on this fire and,
Exactly.
grow faster? Yeah.
But
Yeah.
those are the types of insights that you get when you start to
Yeah.
incorporate your financial model into how you run your business. And so you start
Yeah.
to make way better decisions than just guessing.
Which honestly, even, I mean, both of us have run our own companies and both of us have invested. People just were not doing this
And they
up
still don't
until,
a lot of
yeah,
times.
exactly. Yeah, yep. And I mean, you even hear big companies like Uber or, I mean, name the company, even frankly, Google took big swings and misses at industries or markets or whatever. You sometimes in hindsight, you wonder, were they really having good info on this? I mean, obviously Uber's done great, but you see how much money they spent in China and that market just never worked. And you wonder, oh, if they were tracking that, and maybe they were, maybe they just had other reasons,
I
but
hope so. And at what point do you pull the plug, right? And it's like, at what point do you go, yeah, we're missing our numbers so bad here that
yeah,
we need to pivot? But if you're not,
exactly.
you're totally right. If you're not measuring, it's like you don't know. You don't know
Yeah.
when or if you should pivot or, cut bait. So
And I imagine your client base at Forecastr skews a little earlier
for
stage
sure.
generally. Yeah.
Yeah, we're not working with like Google or anything like that. That's
Yeah.
definitely upstream. But yeah, we're our kind of, we call it the bullseye company. Our bullseye
Yeah.
ICP would be companies with 1 to 10 million in revenue.
Okay.
We've got companies that are doing like 50 million in revenue as well
Yeah.
that we're
Yeah.
definitely deep in with. 1 to 10 million is kind of the sweet spot. Companies that are doing even 100 grand in revenue, or they've raised at least a
Uh-huh.
little bit to where they have something that they could leverage a financial model with, and
Yeah.
it can be beneficial. Those are probably the good companies. At the same time, we've got like some free financial modeling templates. We've got
Yeah.
tons of free resources that we try to use to help nurture those early pre-seed companies.
Okay. And I was going to ask about that selfishly because I work with Colorado State, I work with Startup Colorado, like I get to work with a lot of fun folks. So like and I know Nathan's probably chatted with you about this too. Like, are there good tools, say it's a like Colorado State has this great sustainable MBA program where they have to build a company as part of their MBA,
Yeah.
So if you were a university or someone like that, or a accelerator or generator, is there an offering you guys have that is kind of a entry point for
We
folks?
absolutely. So there's two. So one is I mean, we've got the free financial modeling templates. So for
Yeah.
example, if you've got a marketplace, it's going to be very different than a consumer product company.
Uh-huh.
We've got
Sure.
templates for all of those. And so if you can kind of helps you get a head start in terms of being able to start building out your financial model. You're not
Okay.
just starting from scratch, right? So those we make those free and available to anyone. Another entry point is, we'll go in and we'll build out the financial model um, for folks. Like with our analyst team, we'll go in and say, okay, let's either move your existing financial model into the Forecastr
Uh-huh.
software, or we'll build it from scratch with you as the founder. And so now you understand your business, you can see how it works, but then we'll train you how to use the software. They can go to either a self-serve model to where they're
Okay.
paying like, less than $100 a month, or they
Okay.
can go into where we assign them an analyst that keeps everything up to date for them, runs all the stuff,
Gotcha.
automates the reporting, and then meets with them on a regular basis just to make sure they are tracking and creating those good behaviors.
No, that's so cool. I'm just curious because sometimes we'll market to venture capital firms or other sort of capital allocators. I mean, that would seem like a good place to market for you guys
Oh,
almost. Hey,
so
everyone who is taking Andreessen Horowitz money has to use Forecastr or something like that. Are you seeing that?
okay, so this is interesting. So I mentioned that when I joined Carta that
Yeah.
Tom Matta, hired me about 2 months ago now, maybe a month and a half. I ended up getting a chance to bring Tom onto Forecastr. So
Awesome.
he was like employee number 12 at Carta. Had dinner just last week with Henry Ward at Henry's house,
Yeah.
and he's now part of Forecaster.
Oh, that's
And
awesome.
his specific focus is on VCs. Because if you look at the
Yep.
benefit to the venture capital firms, but also to their portfolio companies, is one, you're forcing this behavior of
Yep.
knowing numbers, right? Even if you're a
Yep.
Series A, Series B company, you've
Totally.
got to know your numbers.
Build the muscle. Yep.
Yes. And so now you've got this good habit. You've got a software
Yep.
platform that's keeping everything there for you, making it
Yep.
easier to lift. You're probably at a point where you don't need a full-on CFO.
Uh-huh.
And that's way too expensive. Early on, you might not even need a fractional CFO, but we can also provide that. But at the very least, you've got the software platform that now enables you to start automating your reporting. So now your investors are going to start to get monthly reports,
Yeah.
which if you ask any VC, it may even be written into their
Oh, yeah.
agreement.
Never happens.
It's like pulling teeth to get a
Yeah.
quarterly report even.
Uh-huh.
It's
Yeah.
like, when was the last time you sent us your quarterly report? Is that you're actually required to do this, but
Yeah.
you
Unless
know,
there's a board meeting coming up, it's not happening. Yeah.
yes. Yeah. And so now if you can put that on autopilot, the
Yeah.
nice thing for the investors and for the companies is that, you can identify a cash shortfall like,
Uh-huh.
9 months in
Yep.
advance, 12 months in advance, instead of getting to 3 months and going, we might run out of cash. If your
Uh,
investors know that well ahead of time, you can start
yeah.
planning together. But if you hit them 3 months and you're going to run out of
Uh-huh.
cash, that's not the time to be letting them know.
Bad options. Yep.
Yeah.
Oh, that's super cool. Yeah. Oh, that's awesome. Well, no, I think we do, it's been a choppy time in venture, especially just liquidity wise. I think there's still a lot of good companies on the books of a lot of funds, and I think a lot of them will turn out well, but we're just starting to see in the mid market, a lot more MA. And so hopefully that flywheel start. Just
So,
curious. I mean, you're around the Utah ecosystem so much. How are you seeing Utah these days?
yeah, interesting. I spent a lot of time in a lot of different ecosystems
Okay,
these
yeah,
days,
I was wondering, yeah,
but
how much you're traveling
Utah
to.
specifically, you are seeing, I mean, the good companies are getting funding, and we've
Uh-huh.
got a great VC network here,
You
and
really do.
we really have a solid VC ecosystem here. So
It's fantastic.
the
Yeah.
good companies are getting funding. You're seeing these programs like Sandbox down at the university level, like
Oh
producing
yeah.
some really quality companies. And a lot of those, I mean, the top ones are getting picked up and getting funded pretty easily.
Yeah.
But there's the whole other story of there's a lot of companies that are struggling to get funding. I mean, just
Yeah.
like anywhere else. And, it's venture's a tough spot, right? A tough space right
Yeah. It really is. Yeah.
now.
Yeah.
Yeah, it's
And
a
I
little,
think it's so important for our economy and for the country in general to be that tip of the spear of innovation. But it is tough. I know a couple, I think KKR and a few other folks have spun up funds to buy like the singles and doubles out of venture funds to create that liquidity. Because you have all these people who, they have fund three and they're trying to raise fund four, and all their LPs are saying, you haven't given us any money back from two or three yet. Like, what do you want us to do? And you're like, oh, on paper we're up,
yeah,
this or
right,
that. And they're like, well, yeah, until the cash hits our bank account. And as you know, like a lot of these LPs are hospitals and universities and pensions. Like
right.
they actually need that liquidity eventually. They can wait for a while, but yeah.
Yeah,
So yeah,
they weren't signing up for a 15 to 20-year time horizon
exactly.
on
Yeah.
most. So
We were told seven. Yeah,
yeah,
exactly.
so
Yeah.
it is an interesting spot right now. Liquidity stuff. I honestly, I had such high hopes for like Carta X or the whole secondary market.
Yeah.
It's tough. I mean, you get discounts. I mean, I bought shares on the secondary market, a huge
Oh
discount.
yeah. Yep.
I mean, I have a hard time selling shares on the secondary
Uh-huh.
because of the discount. You're just like, man,
Yep.
I don't know.
And it's interesting. We just had we kind of have this internal group, like the nerdy startup people, in Venture Best. And one of the things that's come up is sometimes there's sort of unauthorized secondaries going on. And
Oh,
how much restriction do you want to put on people to not sell, and or what ramifications versus, as you know, a lot of these folks are in Austin. Salt Lake is not cheap anymore. Denver's certainly not
yeah,
cheap. Obviously San Francisco, Boston, New York, LA. So you have some great employee or great co-founder who's really not getting paid, and they need to pay for groceries and pay for car insurance. So I get both sides of it. Yeah.
it is. That's tricky. The whole liquidity thing is tough.
It's really tough. Yeah. Well, hopefully, I feel like we've seen a lot of mid-market M&A, and all my other law colleagues, at other firms even, seems like in that sort of 25 to 250, there's quite a bit happening. Yeah, hopefully that'll free some things up
Free
at least. So,
something up. Yeah,
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 yeah.
that'd be great. I'm
So,
curious, what
oh,
are your
yeah,
thoughts on the IPO market? I mean, are we going to see that
yeah. We,
eventually unthaw?
Yeah, I mean, we've had two good ones lately that have priced and sustained. So, that's really good. Almost everyone told me it's exactly the experience we had in November. And I'm not talking politics, but kind of in November, there's this really big optimism, euphoria, lots of M&A activity, lots of sort of financial activity. Then sort of the tariff situation and some of that uncertainty hit, some of the
Yep.
geopolitical stuff. It kind of all paused like late March, early April. And then now everyone seems, especially mid-market, I know my colleagues who do the mega deals still aren't that busy, but the mid-market's really hot. And then I think now that we're seeing a couple of these big IPOs hit, I think the other thing about public offerings is just the regulatory burden and expense to be a public company right now is
Yep.
really high. And so you're seeing these great companies like Square and whatever say, hey, we can
It's
create some liquidity in some targeted ways, and we're just going to stay private. We're good. So that's like an interesting phenomenon too. And I honestly don't know which way that's going to end up. But I think unless we bring the regulatory burden down, you are going to see some really good companies stay private
stay private.
forever.
Yeah.
Yeah,
Or even, I mean, you're seeing companies go private,
exactly. Yep.
but through, PE or whatever. So
It,
yeah, really, really interesting.
it's an interesting time. Yeah. And as always, in hindsight, I remember post '01, it seemed like or 2000, the first tech bubble. You just thought the world was over. This is never going to come back. And then I've posted before on LinkedIn, like some of the best, most successful companies ever came, Amazon, a bunch of good companies came out of that aftermath. And then 2008 happened. You look Airbnb, Square,
Yeah.
Uber, like all these really good companies came out of that aftermath. So anytime there's stress in the market, great companies like Forecastr or whoever, get founded because people have to solve problems that maybe they could have done sort of a lazy way in the past when money was free, and they would have just hired 3 CFOs as a seed company because they could raise $10 million. It's like, oh, now you can't do that anymore. You got to figure out a solution.
Shawn, that's really interesting because one of the things that attracted me to Forecastr was Stephen and Logan, the founders, both CFOs, finance backgrounds. They ran the company very disciplined, right? While some of our competitors were out there raising like huge rounds, they were a lot more conservative. And there's a risk reward there, right? I mean, you go big and sometimes it pays off. But where it hit in the last few years, it's like, thank goodness we had the consumer. In some cases, it's kind of who can last the longest, right? If you can outlast everybody else, you have the opportunity now to take all the market, right? So it's kind of an interesting spot to be in. But I would say, the companies that can be disciplined in this market and they form the right habits, are better companies in the long run.
Yeah. Well, I know we're kind of winding down here, but one of the things I would be remiss is, as someone who has started companies, invested in companies, are there any words of wisdom you would give aspiring founders, or I guess, aspiring founders? I'll leave it at that.
Yeah. Going back to my Carta days, I'll say, and this isn't just a plug for you, Shawn, but I do always tell the founders I work with is make sure you have a good startup attorney in your back pocket. I mean, no, you don't have to spend outrageously on everything, but have somebody that knows what they're doing, that specifically works with startups. They're not a, corporate lawyers, just somebody that doesn't work with startups every day. Get a startup attorney and make sure you run stuff past them so that you don't make mistakes. So it will save you so much time, heartache, money, if you just do things right from the beginning. That is one piece of advice I give to all the startups I work with.
Well, the startup lawyers,
a bunch of them your way.
Well, it is sad. And almost all of us, and obviously we love our firm, but even most of the folks in this ecosystem, we're always happy to give you a little time and invest in you. And like so many things, whether it's getting the EIN wrong or setting up the entity wrong, it's like, oh, a 5-minute phone call, I could have fixed this for you. And now it's like 2 weeks of dealing with the IRS and a bunch of headaches or whatever. I would say for anyone listening or watching, Jeff is one of the most active people I know on LinkedIn, and always in a giving community way. So if you don't follow him on LinkedIn. But any closing thoughts or anything else you want to share?
I mean, honestly, this was just an honor to be able to catch up with you, Shawn.
Likewise.
Love what the support that you give to startup founders has been really admirable, and I think that's why you and I have stayed friends for so long. And I love sending folks your way because I know they'll get taken care of.
Well, thank you.
That's the whole thing. Even if you're not the one taking care of them, I know that you will make sure that they get the best. The carpet treatment.
No, we do. Well, we appreciate you so much. Thank you.
And that's a wrap on today's show. Thank you for listening to the Venture Best Spotlight. Don't miss another episode. Be sure to subscribe on Spotify, Apple Podcasts, and YouTube today. And if you really enjoyed today's content, please take a moment to rate and review the episode on your favorite podcast platform. Have a great day.